the main liquidity and price discovery center for Russian instruments. We initiate coverage of MOEX with a buy rating at a target price of 180.49 rubles per common share. We see 23% upside potential to our target price, which is calculated by using a two-stage VCFE model and calculation of multiples. Our recommendation is driven by our industry outline fundamental factors, including 6 growth drivers, valuation, investment risk analysis, and company-specific details, such as a flush free float, solid corporate governance, dominant market position, and high operating margins.
Let's talk about industry overview. There are some factors which show a big potential for Russian financial market. First of all, bond market depth is low in comparison with other countries. Corporate bonds to GDP stood at relatively low 21%. Low levels of Russian public involvement in the financial markets. So the number of active retail investors in the MOEX equity market is 89,000. Underdevelopment in lots of products and markets. Future privatization should improve market depth. And fallen deposit rates could make the Russian public more interested in ways of investment to higher yielding products, starting with sovereign bonds. That show that Russian financial market have a good resources for expansion in the next 5 years. In 2011, there was a merging of MOEX and RTS, and for today, the Moscow Exchange is the monopolist in the Russian financial market, positively influencing on its development and functioning. Which shows our competitors using information mostly about their market capitalization to GDP ratio, because almost all of them have around 20–30%, which means that the market is undervalued. But as we see on figure 12, the Johannesburg Stock Exchange market is overvalued, and it means that it's risky to invest on this market, but it's also had the biggest market capitalization, and also share performance is quite similar to MOEX. That's why we decided to see its development. MOEX diversified business model and defensive revenue mix helps to benefit from sectoral trends in the Russian financial markets, such as a growing local retail investing base and the development bond market. First of all, it's top-of-the-class margins and dividend yields, so that the cash-generating ability. So MOEX exhibits some of the best operating margins among global exchanges. Second one is expansion of the product offering. A new product, Generate Collateral Certificates, was launched on the money market. And third one is the highest free float in Russia. So MOEX free float increased to 62% in July 2016, which is the highest among largest Russian listed companies.
Determines 6 long-term fundamental growth drivers of MOEX share price: float of bonds in yuan, remission of sanctions regime, and growth of number of foreign investors, increased number of private investors at the exchange, high dividend yield, development of the country's stock market, plans of privatizations and IPO. In our view, the last two drivers are the most important. The high level of the key rate of the Central Bank of the Russian Federation and the necessity of financing the budget deficit will contribute to an increase in bond issuance by large corporations and government. Shares privatizations of VTB, Elros, Russian Railways and new IPOs will help to increase trading volumes on the stock exchange. We expect by 2021 the change in the structure of MOEX income, more specifically an increase in revenues from the commodities market, equity and bond market, and the reduction in income from the derivatives market, money market and FX market. If to speak about indicators of financial leverage in the planning period of 2017-2021, there will be decrease in size of debt obligations of the company because of completion in 2017 the program of updating the trade system and the equipment which need ripened after merging of RTS and the MOEX. According to our forecast, it's possible to expect growth of financial stability of the exchange. Moreover, transformations which are already done for the period provide 2014-2015 growth of fixed asset turnover.
Our target price is based on the FCFE analysis and multiples analysis. We give a buy recommendation. We estimate the intrinsic value of stock within 5-year FCFE model. The 5-year period enables us to incorporate the company's growth potential and to analyze medium-term tendencies in the industry. FCFE model shows the target price of 181.26 rubles. Based on historical data and factors of growth, we consider that revenue of the Moscow Exchange will grow on average in the first 3 years for 90.26%, and since 2020 speed will be slowed down to 8.1%. We predict growth of revenue based on increase of the commission income and client activity. At the same time, interest incomes will decrease together with decrease of a key interest rate of the central bank. Besides, for the purpose of strengthening of competitive line, it's planned to upgrade of listing and simplification of corporate bonds issue, development of the goods market, in particular the market of grain because of the record harvests in Russia. Also, we estimate 7.41% WACC using CPM model. We use a comparative approach to the valuation of shares price based on calculation of multiples for analogical companies. The value of Moscow Exchange shares based on PE and PS multiples is lower than the value based on EV/EBITDA multiple. Despite this, all multiples indicate an increase in Moscow Exchange share price, so the target prices of EV/EBITDA method and PE and PS method confirm the forecast of the two-stage FCFE model.
Moscow Exchange went IPO on the Moscow Exchange equity and bond market in February 2013, raising 125.3 billion rubles, and for now, the company's market value has increased by more than 139% since its IPO. Moscow Exchange's current corporate governance system reflects its unique position as one of the largest Russian public companies included in the MSCI Russia Index. MOEX's current shareholders are the Bank of Russia, Sberbank, Bank for Development and Foreign Economic Affairs, the European Bank for Development and Reconstruction, and MISEX Finance. Absence of a controlling shareholder and large percentage of shares in free float makes the system of corporate governance transparent and predictable. The Moscow Exchange has a very experienced management team. CEO and other members of executive board have an average more than 20 years experience in finance and exchanges. Moscow Exchange Board of Directors consists of 12 members, and half of them are considered independent. 3 members represent Moscow Exchange, and other members represent Central Bank of Russia and state-controlled institutions. The Board of Directors has 6 committees representing audit and remuneration, budget, strategic planning, risk management, and technical policy. The main advantage of Moscow Exchange shares is dividends growing rapidly from year to year. In December 2015, a new dividend policy was adopted, according to which the dividends should be at least 55% of its net income. In accordance with the requirements, in 2015, the company paid 58.2% of Moscow Exchange's net income under IFRS as dividends. Our estimates, however, envisage the possibility of much higher dividend payout. Currently, Moscow Exchange Group comprises 13 legal entities, taking into account the parent structure.
Watching the variability of MOEX stock returns relative to the market, we examine the MICX index. It should be noted that there is a strong correlation between these financial assets. Beta calculation indicates the average level of systematic risk of MOEX shares. The result of MOEX activities are susceptible to all types of risk inherent in the financial industry. Political factors in shaping trends in world markets will prevail over the fundamental economic. On the internal market, we determine following risks. Firstly, adverse trends on the internal capital market, then changes in the monetary policy, swift movements to cut rates by CBR will undermine MOEX interest income and thus its revenues and potentially its dividends in the upcoming years. The last is the lack of the clarity with the pension system. On the external market, probable limited ability to raise funds on world markets for Russian borrowers in connection with the operation of international financial sanctions against Russia, withdrawal of international investors from emerging markets, increased competition from the stock exchange and alternative trading platforms that are turning Russian assets. For emerging markets, recent decision to raise the target range of the Fed's interest rates by 0.25% and further planned in next year increasing it carries certain risks, in particular the medium-term pressure on currency. To sum up, we want to say that we definitely recommend you include MOEX shares in your portfolio.